The National Investor's motto is, you can get information anywhere, but here you get knowledge. And for well over 40 years now, Chris Temple has imparted that knowledge, an unparalleled, understandable, and useful take on the big picture of the markets and of our world. Here is Chris with today's topic.
Hello again, folks. In this conversation, I'll be joined once again by Victor Cantore. He's a longtime friend, CEO of Amex Exploration, which you will find on the Toronto Venture Exchange under the symbol AMX, and here in the US on the OTCQX listing, it is AMXEF. As always, I've got to remind you that Victor and or myself may well be making forward-looking statements as those are defined. A lot of plans for the future, but I have to say that some of the forward-looking statements made in the last year or so have borne some fruit. As you see right here, the share price has had a great 2025. And look, beyond, and I'll ask Victor his opinion, but beyond the run that gold has had, I think people have finally woke up to the fact that his strategy to incrementally build a very viable and hugely economic starter mine, which they're now in full feasibility study over, was the right thing to do. A lot of people want to see huge resource and huge drilling right away. I believe that's all still going to come down the road. In fact, the reason why I'm catching up with Victor here on the 1st of December is because they just announced this morning that they have increased by 1.5 times again their footprint in the Abitibi. So now, probably next to Agnico Eagle, they're the largest landowner and project holder in that region of Canada, which of course is one of the best jurisdictions and the best camps in the entire world. So there's a lot to do for a lot of years to come. The company recently was feted by the province of Quebec, as you see here, for having the discovery of the year. Kind of belated, they augmented the discovery, but still a very deserved award that Victor and his crew got from the Quebec Mineral Exploration Association, realizing that this is going to be an economic boon to the province in years to come as well. And here once again is my friend Victor Cantore, the CEO of Amex Exploration. Victor, thanks for joining me from London, where you are right
Well,
now.
well, thanks for having me on. Always a pleasure to come on and talk about Amex and not just Amex, even talk about gold in general, precious metals, and other companies.
Well,
Always,
we'll
always a
we'll get
pleasure.
we'll get to that. We'll get to that towards the end because I put something out on social media to see how smart people are today. I put two photos on there. I want to see if people can make the connection. But, anyways,
Nice.
before you came on, I mentioned and congratulations for your belated maybe acknowledgement by the province of Quebec for your Perron discovery, and it was actually a few years ago that the Mines and Money folks were who you're with this week in London at the Resourcing Tomorrow. You won a similar award from them a few years ago uh,
That's correct.
for the initial big discovery at Perron, which just keeps getting bigger and better. And the reason we're visiting for a few minutes today on the 1st of December is you announced this morning that you're going to be, I don't know if it's the Ted Turner or the Bill Gates of the Abitibi. Years ago, Ted Turner infamously bought up a whole bunch of the ranch land in southern Montana. And you guys are kind of doing the same up there in the Abitibi. You just announced that you're more than doubling your footprint up there. It's from 190 some square kilometers to now 500.
That's correct. That's correct.
It's going to take a lot
It's
of
quite
generations to explore all that.
not really, not really. I mean, look, it was one thing we know how to do is explore. Like that greenstone belt. I mean, you're in in one of the most prolific gold belts, in the world, and to own that much land there along one of the deformation zones, like if really you're on the greenstone belt. When you look at the map that we put out, like it's yeah, we're going to be on this thing and trying to discover more. I mean, look, it was unexplored. It was underexplored. Sorry, it was
Yeah.
underexplored. We were very successful in in finding a deposit. So there's going to be a mine, and it's a high grade mine. and we have pretty good knowledge here, and using AI and machine learning, I think we're going to be able to home into some nice discoveries coming up shortly. It's we're putting the things to look for now on the exploration side is in Ontario, we're gonna, the next thing is gonna be having an exploration agreement with the First Nations that should be coming up shortly. And yeah, it's like I'm really excited. It's a big land package. I don't know too many other companies, I guess other than like Nico Eagle, that have controlled that much land on a deformation zone
Right.
in the Abitibi Greenstone Belt.
Right. And to remind folks, that deformation zone, the existing resource that you've got delineated, which, and I'll ask you about this in a second, you're now going to a full feasibility study on
Yeah.
that PEA you did in September. I mean, you've only scratched the surface. You're not covering a big part of that area,
Oh,
even the land
absolutely.
you had before.
Absolutely. So we have 45.6 square kilometers on the, what we call the original property that we had. And then
Right.
we added another 152 square kilometers, but it's not just the square kilometers. If you look at where we've been finding most of the mineralizations, where the fault zones are, there's a
Yep.
little over 20 kilometers of fault zones. And I'm talking about the fault zones just on the original package. And there we've probably only scratched maybe 4.5, 5 kilometers of it. There's a lot more exploration. There's a lot more discoveries to be made on the Quebec side. But then we went from 45.6 square kilometers to 197, and now 500 square kilometers, all on very prospective greenstone, greenstone rocks.
Right. Now, Victor, on those really both of those acquisitions, the other one was what, earlier this year?
Yeah, in March. It was
Yeah,
in
back in
March.
March. I remember the last winter you were telling me about what was coming as far as that announcement. Now now you've gone your tenfold increased or better in the land package you got,
Yep.
especially of this last acquisition that you announced this morning on the first. Has there been much past work done? Is it all been pretty much greenfield work?
No, there's been work. So these properties were really looked. Because you're on the same deformation zone as the Normetal mine, which is only 4 kilometers to the east of us. So this whole deformation zone was really being explored for VMS, for copper rich VMS, because that's exactly what the Normetal mine, the former Normetal mine, was a copper rich VMS. So there's lots of potential for that. But now we've got the knowledge on how to explore it for gold. Like we're chasing this for gold right now. That's what
Right.
we want to find. But there's lots of. I mean, if you look at the previous acquisition where we've done some groundwork, as we get results, we'll definitely bring them out. But there is historical work and historical grades that were on this property that we originally the last acquisition that we did, and plus there is other work on this one too, like but again, mostly copper showings, a little bit of gold showings. There are gold showings on it, and we're gonna define it more as we go forward, but in the not too distant future, look, we're gonna define them more as we go forward, and then in January sometime we'll start drilling those properties as we complete the exploration agreement with the First Nations, and we're going to collaborate with them, work closely with them, and actually drill this thing properly.
Neat. Now, back just a month ago on the 3rd of November, you announced plans to do another 100,000 meters of drilling. That was all pretty much, though, correct me if I'm wrong, Victor, that was all pretty much to expand the footprint in and around what you've got already, primarily.
Absolutely. Primarily, there was also what we call condemnation, because we're good since we're moving forward with the feasibility study.
Yep.
You're going to have to do what they call condemnation drilling. So there was some of that also, but they're also absolutely the current footprint that we have. We're looking to expand those, including regional drilling, all on the original 45.6 square kilometers. On everything else we bought, we did do some groundwork, which we will announce. We will announce those shortly.
Oh, good. And so beyond the 100,000 meters, then you're going to be drilling in and around the existing Perron resource. You're looking at maybe doing some additional drilling, maybe on a few targets on the new ground.
Oh, absolutely. So the 100,000 meters will be all so the first 10,000 meters will be in and around the fort. So from here to the end of the year, it's going to be around where the original footprint is,
Right.
but the 100,000 meters will be property wide.
Oh,
So
okay.
whichever it will be property wide, including all the new property that we purchased. We're going to be doing it, initial groundwork, initial geophysics. And the target that we like the best is going to start getting drilling, and just like we did at the original
Yep.
Perrons, the minute you make a discovery, you bring multiple drills and you drill out a resource that's viable and economic.
So out of that 100,000, there will then be a good whack of new ground that you're going to drill,
Ab-
depending on the. Oh, that's cool.
Absolutely. We have some really, really good targets. Absolutely.
Nice, nice. Well, back to the present time. You announced the end of September. You're going to a full feasibility study based on a PEA from last September. And again, folks, I'll have a link to my last conversation with Victor from back in September and other stuff that gives you all of the nuts and bolts of that. Very economic. And as I said before you came on, showing your stock chart, Victor, you've had a great 2025, and not just because of gold rise, because people are finally getting onto the fact that you had the strategy right from the get-go to incrementally build up what is going to be a really nice starter mine. But the first, it's certainly not going to be all that you have going forward, and I think people have finally woken up to that.
No, absolutely. I totally agree with what you said there. It's not just because of the price of gold that went up. We fundamentally transformed the company with the new resource and the
Yeah.
new PA. I mean, these are spectacular numbers. I mean, gold right now is trading at $4,200. At the time when we put out the PA, we used a $3,400 an ounce spot, and these numbers are spectacular. Like your post-tax payback period is zero point 0.4. You have a post-tax IRR at 107. And it's not like you could get these numbers. Sometimes you see these spectacular numbers and they're like from, a small deposit, a small production. We're still talking about over 100,000 ounces. Like the 10-year average is 112,000 ounces a year, with an all-in sustaining cost of with the toll milling is 1165 for the first 4 to 5 years. So even if your cost is 1,200, if you're selling gold
Yeah.
at 4,200, that's $3,000 an ounce
Pretty
of
nice.
free cash flow. That's at 100,000 ounces. That's $300 million US in Canadian terms. You're looking you're looking at $420
Well,
million
Canadian
a year
terms, you
for.
got to use gazillion, I think, or
Yeah.
something like that.
Yeah, exactly. Or maybe we should just call the Canadian. I'm probably going to upset a few Canadians here, but I'm Canadian. I could do it. We could probably rename it the Canadian peso, but I
Yeah.
guess compared to the US dollar, but it's
Well,
all
we'll
it's all
see. We're
good.
gonna we're gonna see a lot of jockeying in the year ahead over currencies and a
Yeah.
whole lot of stuff. We've got debt issues, and and let's talk about that for a second.
Yeah.
'Cause I do want to pick your brain on how you're seeing the gold market. You
Yeah.
talk to a lot of institutions and things like that. I was at the New Orleans conference, back about almost a month ago, and one of the things I was asked by one of the people that interviewed me there was, "What's my target price for gold?" And my
Yeah.
answer was, I never set a target price. That's for
Yeah.
grabbing
That's right.
headlines and, social media huckstering and all that kind of thing. But I do list the reasons why gold has got a bullish tailwind. And so my answer is that as long as those circumstances are in place, gold's going to
That's right.
continue to go up. And it'll peak when those circumstances go away.
That's
Or
right.
recently, when we had that vertical spike to 4,400, I told people, hey, maybe take a little bit of money off the table. This got too stupid, too fast, even for gold. But the
That's right.
long-term trend is still intact. I alluded to this a minute ago. It's an open secret now that Kevin Hassett is going to be the President Trump's new Fed chairman.
That's right.
And I put a picture of him on all of my social media next to somebody else who was Fed chairman at another critical juncture for the money systems of the world over half a century ago. That
Yeah.
guy's name was Arthur Burns. Arthur Burns was selected because he was going to be a pliable pawn for President Nixon. And Kevin Hassett is being chosen because he's purportedly going to be a pliable pawn for President Trump. And when you've got a president who on his sleeve says, I want interest rates slashed dramatically, I want a cheaper dollar, well, there's your first two reasons why gold is still a long-term uptrend. Uh, what can you add to that?
Yeah, look, you know what, I'm looking at all the new statistics or the new price projections that the major US banks are putting out. You know, it's quite impressive because you're getting numbers of four, five, or $6,000.
Yeah.
Um, you know, one of the things that I'm looking at, and again, this is just me, it's my opinion, but you know, if we're gonna in the US, if we're gonna start moving away from a trade deficit and coming to a trade surplus. I mean, one of the ways to do that is, you know, with the dollar weakening against other currencies. And if that is to happen, you'll see gold going to four, five, and $6,000. And not that it's bad for the economy. I think it's very good for the economy. I think this administration has a plan in place, and let's see how it plays out. I think it's going to be very positive for the price of gold.
Well, I'm going to be putting out some stuff in the near term, and if you're not already on my mailing list, folks, you want to get on it because I'm talking about the game plan of exactly that, Victor, of the Trump administration, which knows full well that number one, the idea that it is even going to substantially reduce the deficits and debt has already been blown to smithereens.
Yes,
In the first year of Trump, you know, we closed the fiscal year 2025 just a fraction below fiscal year 2024's deficit. This year is likely to be higher. We started out with a bang. October, the first fiscal month of this new year, was nearly 300 billion for 1 month, an all-time record for October. And this is after revenues year to year went up 40 billion. The problem was spending between last October and this October went up by 100 billion. Okay,
that's right.
so this whole idea that they're going to rein in spending, forget about it. So what Trump is trying to do, and we'll see how successful he is he understands that, like the old adage, inflate or die. And so
Hmm.
he wants his man at the Fed to push the interest rates down, push the dollar down, goose the
That's correct.
economy. It's going to be at the expense of higher inflation, no question.
Yeah,
But if that
yeah.
broadens the tax base and wages go up and so forth, well, then, you know, maybe a generation from now we'll just add another zero to everything. The, the rate things
That's
are
right.
going.
No, absolutely,
Yeah.
absolutely. No, I think it's great. And you know, sir, just to change the subject for a second
Yeah.
here, I have a question for you. So, because I was at one of the conferences, I was doing a presentation. We were talking just about exactly what we were talking about. Is, you know, I was showing my numbers at 3,400 spot and a 2,500 spot, and you know, and somebody came in. Well, what if gold is lower than that? So I asked him a question in the audience. I says, I got a question for you then. I go, I'm gonna give you some post-tax numbers, and you tell me if you like the project. I go, if I would tell you 2 years, 2-year payback, is that good? Yeah. How about if I tell you the post-tax IRR is 47%? Is that good? Yeah. I go, what if I tell you the post-tax NPV is 659 million? So you take that 659 million, one of the ratios is you put that against your capex, and you know, is over $146 million capex. That's a four. Usually at a two, you already pass. I go,
Yep.
is that project good? So he asked me, well, which project is that? I go, well, if you look at the sensitivity analysis on our page 18, that's this project. This is the Amex exploration project at $2,000 gold. So we pass at $2,000 gold. So like
Yep.
it's an extremely good project at $2,000 gold. I know the other numbers are. Hey, I just wanted
No,
to
you
tell you that.
make a
So
great
even
point.
even
Yeah.
yeah, because even if gold falls, and it was so funny because you know you asked me, well, which project is that? This is it. This is the project.
Well, and that's part of the reason I suspect, and you talk to a lot more institutions that follow you specifically than I do. Everybody these days, and you and I have had this conversation more than once, it's about show me the money. And when
Yeah,
you're showing such killer economics as you are with this PEA and now going to feasibility, yeah, you're going to have to cut gold in half, and you still got a good viable project.
it's still a viable project.
I
Yeah.
hardly see gold getting cut in half.
No.
I do believe the odds are better than not that we're going to chop around for a while, you
Yeah.
know, and you know we may not continue to go straight up. But again, the long-term reasons are all there. Not to mention the fact, and I'm putting out some stuff on this later this week. Look at what's going on in Japan right now.
Yeah,
I mean, the jig is up. You've got what one characterization is a global margin call that's going to call out the ridiculous levels of debt all over the planet, especially on the part of governments. They're going to have to scramble and do the only thing they know to do, and that is print even more money and create even more debt and cheapen their fiat currencies even more. And so, I don't know what the number is going to be, but I got to believe that by the time you start building that first starter, even if it's choppy between here and there, gold's probably going to be higher still when we get
absolutely,
to that point.
absolutely.
If I had to
I
bet on it,
think, yeah,
yeah, great
yeah,
project.
no, no, absolutely. Gold is definitely. I agree with your statement. I think gold is going higher. And I think at some
Ultimately.
point it's going to start going a lot higher.
Yep, yep, I don't doubt that. Well, I'll be interested to hear what your feedback is after you get done with the London conference this week. We'll have to compare notes again before Christmas
Yeah,
time, and I'm greatly
absolutely.
looking forward to all the stuff the new year is going to bring. I think you're finally getting your due in the markets, not just from the province of Quebec, with the award that you got, and I think that's just
Yes,
going to continue. So have a
I
great
think
time
so.
over there, Victor.
Thank you, and I'll see you soon.
For much more of the National Investor's cutting edge content and actionable investment opportunities, make sure to subscribe to Chris's free content at nationalinvestor.com. And don't forget to like this video and subscribe to this channel too. Thanks for tuning in, and we'll see you next time.